Hello guys, good morning also from my side. Excited to introduce you to our first panel of the day. It's about mastering the validator business, and we have quite some legends here. So we have Anuj from Luganodes, we have Tobias from Deutsche Telekom, and we have Alan from Ebunker. So why don't you give us a short intro about your companies and relates to staking?
Yeah, thanks, Robin, for hosting us, and it's a pleasure to be part of this conference and also sponsoring this conference, and lucky to be part of this amazing community. And I'll just take a couple of minutes to quickly introduce Luganodes and myself. So I'm Anuj, the CEO of Luganodes, and we are a Swiss-operated non-custodial staking provider born out of the Lugano Plan B program, which is an initiative driven by the city of Lugano and Tether. Currently, we are one of the world's fastest growing staking providers. We manage almost $1 billion in assets, staked assets, and validate on almost more than 40 protocols as of now, and stand amongst the world's top 10 AAA rated verified providers. And yeah, that's a little bit about us.
Yeah, thank you for the kind introduction, and also shout out to the organizers. Great event, and it was great and honor to be on stage here. So yeah, I'm from Deutsche Telekom. We are an internet and mobile provider, and you might ask yourself, if you are not aware of what we are doing, why the heck I'm here? So in general, we are an infrastructure provider. We have done that since more than 20 years, mainly in the area of mobile and internet, but since 3 years we are also very actively participating in infrastructure provision for public blockchain networks. We are currently supporting not as many protocols as you. We are a little bit slower in that regard, but around 8 to 9. Yeah, and currently scaling up our validator staking business next to some also Oracle stuff and indexing things that are going on the side. Yeah.
Thank you. Alan?
Hello, everyone. My name is Alan. I'm from Ebunker. We are Ethereum infrastructure company, and we based in Hong Kong. And I just fly to Istanbul 50 minutes ago and rush to the venue in 10 minutes. And we are a company aims to help Ethereum more decentralized. And we provide both software solution and hardware solution for individuals and institution clients. For our software solution, we can make everyone to run your own validator in 5 minutes, and you can choose to run on a public cloud or run in a bare metal. And for our hardware solution, we call it a DPIN product. Did you hear about DPIN? It's a short for decentralized physical infrastructure. It's a small box. It's called E-Node, Easy Node, that's short for, yeah. And it's a small box. You can run it in your home, your office, and any place just have internet. And it's a low power consumption, and it has no noise, no heat, and you can run it safely and effectively your own validator in your home and any place that have an internet. Yeah, so we now have 2 service. One is software, one is hardware. Thank you.
Thank you, Alan. Thank you, guys. So let's talk about the market and competitiveness. What do you think, or based on your experience, how competitive is the validator business? Would you kind of segment the market into the different sorts of clients that you serve, such as retail, institutionals, or any other clients? Yeah, give us some insights.
Yeah, probably I can quickly take this question first and pass it to others as well. We have been working with a bunch of institutions, and what we have realized that they deeply care about security, compliance, KYC, AML procedures in place. So definitely, every organization is price sensitive, but there's still room to onboard institutional clients, and they are willing to pay a little more than the retail folks, especially. And in terms of competitiveness, obviously there is like intense competition overall in the validator space, given that there are like more than 250 staking operators, and that is by design as well, because you need so many operators to run a network securely and completely in a decentralized fashion, right? So with that said, overall, from a pricing standpoint, like it gets like neck to neck for the retail side, but for the institutional side, they deeply care about, what are the security measures that have been in place, what is the organizational structure, what is the financial capacity of the company, business continuity, disaster recovery plans, etc. So these are like topics that get discussed in any closed room when you are in, having conversations with these institutions. And that's something that we have been personally working on as well, and in order to onboard all our clients. So this is some slight insight I wanted to share. And probably Toby, you can.
Yeah, so from my experience, I tend to cluster the main customers into 4 groups. So on the one hand, we have venture capital funds. So basically the guys that invest into crypto, and on top of that also want to earn an interest on their investment. For example, on Celo we are working with Andreessen. That could be one good example where we are validating basically with their delegation. Then another big cluster is liquid staking protocols. This is like mainly on the Ethereum side of things. I would kind of describe them as a customer base. Of course, it can be debated, but and then a third one would be blockchain foundations. This is not as big in the Ethereum ecosystem than compared to some other layer ones. There the foundations are a little bit bigger. They are mainly looking into decentralizing their networks, particularly when they are in the very beginning, but also after that. And then lastly, the biggest kind of area that is coming is like the institutional space, which is also now trying to get into staking, and also to some extent already there, but slow process. Talking out of experience from working in a slow big institution. Yeah.
Thank you.
I'm not sure whether you asked for that. Which one is have more advantages compared with non-custodial and custodial?
Yeah, or you can just give us your insight on Ethereum staking, how you see competition.
Yeah, because we provide just the non-custodial staking service. We don't have a custodial service. I think it's 2 different market. Our clients is different. For me, our client is LSD protocol and some whales who is very who focuses on its crypto assets safety and privacy, and I don't know other people that they don't want other people to know who had so much coins, right? And for the custodial service provider, I think their clients is crypto fund or some old money from the traditional, I think a traditional finance market. Yeah, so I think it's 2 different markets, and I don't have clients from that that market. Because they want some compliance. They have some compliance requirements, and they need KYC and a lot of requests that I can provide. Yes.
Understood. Very interesting. So most of the blockchains have like a few very large group of validators, and then we have hundreds of runner-ups of smaller validators. Can you share any insight on strategy-wise how the smaller validator could increase your market share? For instance, Luganodes, I think in 2 years you went from non-existing to being the largest validator on Polygon POS, right? Are there any tips and tricks that you could give to the audience?
Yeah, absolutely. So, from a small validator perspective, I feel that people need to build their niche in a particular ecosystem, and there are like plenty of examples of various different solid, very smart small groups of validators who have been doing fantastically when in specifically Cosmos ecosystem or be it Solana ecosystem, and being like the thought leaders in the space when it comes to validating on that particular ecosystem. So having like deep expertise and niche is something that helps you, succeed in the other ecosystems as well. After you have like strengthened yourself in one particular chain or block, ecosystem or community, and then building a brand around yourself is very critical. So, and being active participant, and how do you build a brand is the next question that comes to mind. So being an active member of the governance committees, like putting in proposals, reading through proposals, sharing feedback, voting on proposals actively is something that also helps in actually building that brand and reputation in that particular community, where you get recognition and other people also start noticing that this particular validator has put in so much effort into actually proposing something meaningful for the community. So these things actually add up a lot. And then putting in some giving it a slight marketing push is also something that always helps. So being proactive on Twitter, being proactive on these Discord channels, etc., helps, where you are just putting about your opinions on how certain things should be functioning in the ecosystem. So that is also something that is very much embraced in the community, where people love to talk to validators, especially ecosystem. Like foundations want to talk to validators and get like proactive feedback. There are like multiple operating groups that they can be part of and start contributing to. So these are like small tiny steps which add up into you becoming a larger validator. And once you start, let's say validating 1 or 2 networks, then you gradually start ramping that up in terms of operations as you build your brand. And then obviously being part of these communities and these conferences and being known to the other validator crew is also something that is pretty important, because that also gets you access to other good ecosystems which are like looking for new validators to be onboarded, right? So these are some of the things that as a small validator you can start doing, and also being competitive on the price, because you don't have those additional overhead expenses, right? So these are like some of the things that come top of my head, especially to grow the business. And we have been in the similar journey, and thankfully we were also supported by some amazing individuals which helped us give that additional boost of getting to where we are. But the point is that the journey is pretty much similar for all the large validators that have been around for quite some time. They have hustled through years and built out like tooling and products for those specific communities to get that recognition and then grow into other ecosystems. So that's like my insight on this.
Yeah, so I think there are two, when it comes to growing the ranks in the validator business, or a good example is Polygon. I think there are two main variables. On the one hand, it's reputation, and on the second hand, it's pricing. I think the pricing, or like basically commission fee, is the most important thing, because still it's a very, I mean, we, like the staking providers, are taking part of the rewards of the delegators, so everybody wants to have a good deal. With regards to reputation, for new entrants into the space, I think it's very hard to gain the reputation because you need stake to run a validator. So either you provide it yourself or you get it from somewhere else, but without reputation, who's going to give you some stake? So the entry barrier is just very high. For us at Telekom, we kind of have like the benefit that we have some Web2 reputation, and also for like the bigger staking providers that are there from the beginning also have already like a good reputation. So yeah, the price way is maybe a way to like just offering very cheap commission fee. But then again, you're also, depending on your setup, how sophisticated it is, run at the risk of being not profitable. So yeah, it's not easy. Right now, for instance, on Polygon, we are running with a commission fee of 0%, so you get all your staking rewards. I know there are some very big staking providers that charge 10% and have a lot of delegation. No, I'm kidding. But yeah, feel free to check out like the Polygon validator of Telekom as well. Very sophisticated, and we are climbing the ranks. I think we are now somewhere in the middle, so yeah.
Thank you. Alan, do you have any growth hacks? Or, yeah?
Yeah. From the finance side, I think small validator is very hard to earn money as to choose because it's the, I think staking is a business model that margin cost continues decrease. So scales can bring benefits and a profit. So from this side, I think the small validator can, what they can do just ask for foundations help and give them more vote or you know, coins to keep their business. And but from another side, for better for the blockchain, for the chain, and for the decentralization and distribution, I think small validator is necessary in my mind. Yeah, so that's what Ebunker do right now. Yeah, we want help more and more small validator in and lower their threshold and decrease their cost. So we launched a new product called eNodes. It can help everyone to be a small validator. You can run it in your home, in your office, and even you don't need have coin or token, because we have an open platform that can make that token holders to vote for such retail, you know, machines. Yeah. So I think that's it.
Thank you. So when it comes to market entries, as in your companies decide to offer a validator on a blockchain, what is your strategy there? Like, how do you decide when to go into a blockchain, offer your services, and when not?
Yeah, I think that's a good question, and this is something that I get asked outside of this panel as well. You know, typically as to how do you decide whether you want to validate on a particular chain or not. And so internally, initially when we started out, we were like, let's start with all the major public blockchains which have like, you know, very strong communities and teams. But then gradually we started realizing that there are a lot of you know, companies that exist, and every founder has his own thesis of building his own L1 or a L2 chain. So then internally we had to come up with a framework in order to pick and work with select founders. So now what that framework basically entails is, you know, who's the team behind it, who are the investors backing them, which exchanges are they getting, you know, listed on, who are the market makers that they plan to work with, what's the background of the founders, what's the technology stack that they're you know, building on, and whether do we even align with that technology stack or not, do we believe in the future. Then obviously thinking about potential earnings for us as a validator. Do we have the right relationships with the investors that they have, you know, who have participated in their rounds or not? So stuff like these actually, you know, give us like some sense of whether we need to work with that project or not, and do we even directionally align with that community and the thesis of the founder or not. So these are like some of the pointers that I would want you know, people to know, that we internally use in order to make a decision before we start, you know, offering any sort of services to the community, be it, you know, RPCs, be it, you know, sequencers or aggregators, validators, anything. And yeah, that's always a helpful tool to evaluate some of these projects and then basically focus and build a stronger relationship with.
So we take some time to onboard a new network, so we need to be very careful with the networks that we choose, and we do not choose any network where we do not have a customer or where there is no demand for staking. So generally, when we launch on a network, we have at least one entity that is providing us with the delegation that enables us to at least maintain the services. So we're not running at a loss, because we are kind of still in bootstrap mode. We do not have millions of fundings like some of our competitors. So we need to be very picky there. And then when there is demand and customer, we still need to also do compliance checks and kind of see if the technology is if we even can support it and not break any, let's say, custody laws, if there are certain self-stake requirements. So there are a lot of processes internally that also need to be successfully passed by potential protocols. So it's not that easy, and it's a little bit lengthy, but yeah, once we launch on a network, it's for the long run with reliable staking infrastructure.
Thank you. So let's talk about value-added services. Nowadays, is it enough to just run the validator and that's it? Or would you argue you also need to provide additional services? Could be as simple as a community channel on Discord, or could be as complex as some API-based service. What do you think?
Yeah, so typically if you are pretty much invested into an ecosystem, we tend to offer public free RPCs for the community and for developers to use essentially, because we have the expertise and it takes just, little amount of time to replicate some of that. So that's something that we, generally tend to offer. We also offer snapshots of the chain so that, other validators can just quickly use the snapshots. Apart from that, we also host like custom indexes of the chain, because some of the customers that we serve typically ask us for reporting, and you can't do reporting without having your own custom indexes. So what we tend to do is we open source some of our indexer services so that others can also do some sort of reporting for their customers and clients. Which is pretty good for the overall ecosystem as well, I feel, and is much needed. And there are like a lot of other validators who do this as well. This is not like something that we are the ones only doing it. Apart from that, there are some other API services that we build out on top if there is a client demand or need, or if the foundation asks us to do so. That's something that we have always explored, be it in terms of block explorers, or be it in terms of certain APIs, or a modified, dedicated, customized RPC service that is needed. So these are some of the things that we have been doing as a value-added service, and now we are also opening up more to providing value to L2 customers, like chains that are, or founders who are actually building out L2 chains. So that's also something that we are currently very much looking into, and providing and offering services for, apart from just validating the blockchain.
We can provide some different values than the normal staking providers in the space, through the fact that we have like a large customer base, and currently what we are doing with the staking or the Web3 infrastructure business that we are kind of integrating into our system, we are laying a foundation to also build on top of that in the future, meaning, Deutsche Telekom has 250 million customers, and of course we also intend to connect them to Web3 or to help them to move on chain at some point. So this is a huge value proposition that we are providing to the foundations basically, or the networks, which then get integrated into this infrastructure layer. On top of that, we also have a very sophisticated tech setup, which means that we were running everything on Kubernetes and try to automate as much as possible. And we are also sharing this with the validator community. For instance, on Polygon right now, they reached out and try to also educate there. So there are multiple avenues. And also then, because we are a large corporate, we might be slow, but we also have a lot of other large corporate partners. We are very close to them. So we also, of course, help them entering the space as well, particularly on the networks where we are active.
Thank you. Maybe one last question before we give the time to ask questions. When it comes to customer churn for delegators, so non-custodial customers, do you track it? In the sense of when delegators stop delegating to you, do you track it, A? And B, how do you kind of get delegators back? Do you have some special relation management system in place or something?
Yeah, I think for us it's a little different because since we are working with the institutions that stake with us, so we know the customer, we know when they are unstaking, we get a heads up when we are gonna earn less revenue in the quarter. So that's something that's pretty known to us. We know the reason also as to why the unstaking is actually happening. So it's much clearer for us. In terms of the capital that comes in like completely non-custodial where we don't know who is staking, sometimes we are also surprised, and this happened in Sui. So there was someone who had like staked a large amount of Sui tokens on our validator, and suddenly that went to OKX wallet for a 0% commission. So we were surprised to see that, but we couldn't track who the customer was essentially. So there are certain cases where this sort of thing happens with non-custodial provider, like non-custodial delegators where the customers are not known. But with most of the known customers, you typically tend to get a heads up when the staking is going to happen, when the unstaking is going to happen, because you have a close relationship with that customer. So that's typically the case. And in terms of the churn, like you mentioned that how sticky is the capital. So usually we sign contracts which are like, minimum dated to a year with a auto renewal of another year. Unless there is like a massive, wallet, there's like massive downturn in the market where people have to remove their stake and have to, breach the contract. But typically these are like long sticking clients who have like signed for long term is what I would say. Yeah.
So we do not really track that because generally, as said, when we launch on a network, it's okay. So everything that is be added on top of that is nice. Generally, what we see is the people that stake with Deutsche Telekom stay with Deutsche Telekom. But of course, sometimes there are some fluctuations in delegations, but there are also fluctuations in price. There are so many challenges in this area as well, particularly when you build the whole business around the token, right? So, yeah, but we are not doing sophisticated tracking. And in the end, we cannot reach out to most of them anyways because it's on-chain. We have like mainly 1-2 sophisticated customers where we know them, right? There we have some Telegram chat sometimes, but the on-chain delegations, we don't have much impact. Except through our Twitter, there sometimes we reach out. You can follow us on Twitter at MMS_blockchain, like the MMS on the cap and _blockchain. Very nice content.
Right. Fair enough. I think we have 1 more minute for audience question. If there are any, please raise your hand and I will bring you the mic.
Thank you. Guys, first of all, awesome. It's really helpful to help small validators kind of figure out how to path to the next chart. One quick question, right? Yesterday we discussed a lot about how we can grow the overall staking community and business, the overall pie by bringing in more data, more better UX. Do you see a path for validators to do something in that front? And what are the immediate like low-hanging fruits that you guys are focusing on to increase the staking pool overall?
So probably I can just quickly take that. So the question, just to repeat for the audience, was how do we as a community grow the pie, or bring in more operators into the play. So my easy answer to that is obviously institutional customers, coming through the custodial providers like Bitcoin Suisse or BitGold or Anchorages of the world. Would be able to capture more and more value at the custodial level. And once they have the capture, companies like Coinbase as well have done a great job in pushing this industry further and getting more adoption overall from the institutions that exist in this world. So ideally, there'll be growth happening by more and more companies getting educated about crypto. Everyone is very excited about the upcoming ETF, so there's going to be a lot of liquidity coming in, I hope. So with that, I see that the overall staking space will also will be a big beneficiary of that, because what will they do with the asset anyway, right? So it's just sitting in their wallet, so rather just take it.
Thank you, and that's a wrap. Thank you, guys.
Thank you.
Okay.